All right. Hey there, everybody. Thanks for joining me in discussing the $500 challenge. For those of you who don't know, my name is Allison, and I am the Director of Risk Tolerance at Simpler Trading, as well as an options specialist. This $500 challenge is something that I've been wanting to do for a while. I wanted to see if I could take a really small amount of capital and see how far I could grow it in a short amount of time. So my goal is to try and turn the 500 into 5,000 in less than a month, still being very conservative about my overall capital in use, right? Not putting all $500 into one trade. And so we'll see where it goes from here. But the reason why I wanted to start with such a small amount is because I know that certainly during this coronavirus time, money is tight. I know for people like me who are younger, we're trying to build up our savings. And so $500 seemed like an attainable amount to, first of all, gather together. Might be something that you spend on going out on vacation or going out for the month, fast food or things like that. And this way you can try and put it in as an investment and see if you can grow it and start to build maybe a little bit more of a nest egg for yourself, or give yourself a bit more play money to do things as well. So looking forward to this, I've traded, large figure accounts in the past over 3 figures. I've traded smaller accounts, but 500 is certainly the smallest that I've ever traded in here. Hey, Mike, great to see you in here. Good afternoon. Hope you're doing well. So I finally got my account all situated so that it could trade spreads. For those of you who are not familiar with options trading, options are the ability to trade the market without having to necessarily jump into the shares themselves. Hey, Crush, great to see you in here too. So that's what I like about options trading, is that you don't need to be a Warren Buffett to just go in and buy shares of Amazon and be able to trade it and make money off of it. You have the ability to jump in for a much smaller capital amount and still be able to grow and get great returns on trading. So I wanted to make sure my account was set up for trading spreads and trading options, which it's finally all good to go there. And I started off with a very small amount in this account. I technically only have $1,000 in it, but I'm only going to risk 500. Hey, Strange Love, great to see you. And they're not too far away from us. I'm currently in the office right now in Austin, so that is where I am streaming from at the moment. But yesterday, right, now that I've gotten everything settled in the account, I decided to go ahead and put on 2 trades. So I want to discuss them in here. For those of you who are members of Simpler Trading, you might recognize one of these trades, or at least the setup for one of these trades. I also alerted it to the trading room. A little bit different on the option strikes, but we took a nice profit certainly this morning. So hoping to do the same thing in this account. But what I did is I basically opened 2 trades, one in Amazon for this week, so it's going to be a very short dated trade, and one in UNH. So let's talk about UNH first overall, and then we'll hop into Amazon. Let me pull up my chart here, and then I'll discuss the trade itself. So here's my chart on UNH. For those of you who are new to trading, this might seem like a crazy mess. You're not sure what you're looking at, and I completely understand. I was the same way when I first started off. But as you start to look at the technicals, as you start to understand them, things do become a bit easier. So I'll try and explain some of the technicals that I was seeing on the chart here. This is a 1-year daily chart, by the way, for UNH, which is United Health Group. But the signal that I was seeing here that I liked was it looked like UNH was going to go up and go into it. Start to see a bullish move to the upside. Bullish means that the price is going to move higher. And in turn, if we look at putting on a rising bias trade, anticipating for that move to the upside, we ourselves could look to take profits on it. So the things that I saw here, and some of the indicators or studies that I use on my chart, it might be some new terms for you guys, but the studies that I like to use are the Bollinger Bands. These blue lines here, these are free studies on most charting platforms, at least all the ones I've ever come across. And basically the price likes to trade within those levels. When we start to see the Bollinger Bands flare open like they're doing now, that's a good sign that they're anticipating the price to move higher, and in turn is a clue for us as traders that maybe we want to jump into the upside as well and take advantage of that move. The second indicator that I really like to use here, which is free on all charting platforms that I've come across, is the simple moving averages. These are these kind of gold yellow lines on my chart. The short dashed line is my 10-period simple moving average. The longer dashed line is my 30-period simple moving average. And the solid line is my 100-period moving average. When you see the smallest time frame, which is the 10, stacked up above the 30 and both are above the 100, this here is another bullish sign that we could start to move to the upside. So this was another clue to tell myself, hey, let me look at going long in this, which is another term to look for the price to move higher and see if I can't make a profit off of it. We also had momentum. It's hard to kind of see here, but this indicator down here is called the Awesome Oscillator. Awesome name. And when it starts to build back up and has room to move back to the top of this axis here, that's usually a bullish sign, which is what we're getting. The compound breakout tool, which is an indicator, actually Eric had me create, or I had Eric create, I should say. Eric is, for those of you who are familiar with Simpler Trading, he is our kind of coding guru here. He's the one who makes a lot of the indicators that we have at Simpler Trading. And so I asked him to make this one for me based on certain signals that I watch for. And he did, and it's great to use. And it's telling me that there's a bullish signal here. And then we had a squeeze. Once again, for those of you who maybe have never heard of Simpler Trading and don't know what that is, the squeeze is one of our solid indicators here. It's like one of our foundational indicators. And it's great because it can help determine when you might see a greater than expected move outside of its normal trading range that you might see for UNH. So when it prints red dots like that, that means a squeeze is forming, and typically that means you'll potentially see that strong move either up or down and start to occur. And so it just started to fire back to green. That means the squeeze is starting to fire, which is what we want to see. And as you can see with the price from yesterday and today, we've seen a nice jump to the upside and an overall move higher. The last indicator I personally used was the divergent bar indicator. It's this light green blue bar on my charts. And that usually means that you'll see a follow through of a higher high within the next few bars. So when I put all of that together, when I put the Bollinger Bands, the simple moving averages, and my indicators down here, when all of those are pointing to a move to the upside, that to me as a trader is a clue to look at going higher too. So in this account, I opened this trade in my main account and then the price started to move away against me. So I had to adjust my strikes slightly for my $500 challenge account. So I jumped into the June 5th, that's next week's expiration, 310, 312, 50 call. So once again, for those of you who are new and have no idea what this means, let me pull this up on my Tastyworks account because it's a little bit easier to read in there. But basically, these are options. This is the option chain. These are options. And I'm basically in what is called a long debit vertical spread. Hey, Space Cadet, great to see y'all in here. And Crush Equity, welcome too. So we're looking at the 310, 312, 50 long debit call vertical spread. So this is a rising bias trade where I'm anticipating the price to move to the upside. I actually opened it yesterday when it was further out of the money. So we've already seen a nice $4 move up as my strikes get closer to being quote unquote in the money. In the money basically means that the price will start to move above 312.50 ideally for me to look at that max profit potential. But by doing this, right, instead of just jumping into shares, which would cost me $307 per share to jump into, right? I kind of need a big account for that. Instead, I opened what is an option spread, giving myself a limited amount of time, right? I'm looking for this move to basically happen within the next week, by the end of next week, to see UNH trade above 312.50. That's the ideal. Now, because I opened this further out of the money, as you can see, well, it's been jumping around a bit, but overall, it's been showing a profit for the day, right? And that's because the price is moving higher towards my strikes, and therefore this spread, the value of this trade is increasing, therefore allowing me a profit to lock in. So when I jumped into this trade, I actually got filled at 69 cents debit, slightly favorable fill from where I put it in at the time. And as you might notice, 310 and 312.50, the difference between those two is $2.50. So we take the spread width, which is $2.50 like I mentioned. We take away the capital risk that I put into the trade, which is 69 cents, which based on one contract, which is what I hold, is only $69. So very small capital amount that I'm putting in, right? It might be you going out for the weekend, you taking the family out to eat or something like that, right? Might cost you around $69. So instead of doing that, I'll cook at home, right? Or maybe get something cheaper to eat. I instead put that money into this trade looking to get a better profit from it. So that means if 250 is the spread width and 69 cents is my cost basis, my max profit potential on this trade is $1.80. $1.81 technically. And the reason why that's my max profit potential is because if this spread moves completely in the money, meaning if UNH gets to above 312.50, that is the most money I can make on this trade because it has a long strike and a short strike combined with it. So the one is helping offset the other. If both go into the money, that means the spread itself is going to be worth, going into that expiration at least, it's going to be worth the max width of the spread. So because my spread width is 250, that means this spread going into expiration next week, if we're above 312.50, will be worth $2.50. Because I got into the trade at 69 cents, right? That's not going to be a part of my profit, but it allows me $1.81 of profit potential. Because I'm in one contract of this, it's very easy to determine the actual cash value amount. I take 181, I times it by one contract that I'm in. For every contract that is held in an options trade, it's 100 shares technically. So I times it by 100, and that means my max profit potential is $181. So certainly not a bad risk versus reward there. I'm not necessarily looking to take all $181 as a profit. That would mean that I would have to hold the trade into next week and really see a strong move up, which could very well happen. I still think the chart looks great to the upside overall. But I'm just looking to take a modest profit on this. I currently have a good till cancel set at $1.20, which you can see here. The mark is jumping around a bit. Right now it's at $1.24. Will it get filled? Maybe. That's why I have a good till cancel out there. But I'll remain patient, see if it gets filled, maybe work the order a little bit lower. But right now, if it did get filled at $1.20, that means I'm closing out of the trade. I'm getting back my capital. I'm closing it out. So it's $1.20 minus the risk that I put into the trade, which is 69 cents, which means I'm leaving with about a 51-cent profit. That ends up being about a $51 profit overall, close to 100% return on my original risk. Certainly not bad profit to take here and to allow for the account. And I certainly think that's a manageable target to see prior to the actual expiration next week. So what I like about options trading here is sometimes we don't even need to see the move go all the way up to our strikes, right? On UNH, if this can just continue to trickle higher to the upside, which is what the chart is indicating to us, in turn, the value of this spread will continue to increase and allow me to ideally close it out for an overall profit. So that's what I'm looking for in UNH. We'll see how it goes going into the end of the day. Right now, the intraday charts are holding up quite nicely. So all of that looks pretty good to where I think I can remain a bit more patient on this and try and aim for that 51-cent profit. The other trade I put on was on Amazon. I'm sure many of you are aware of what that is. Let me pull up the chart here. So Amazon had a beautiful bullish divergent bar here. Once again, much like UNH, it's a signal that we might see a higher high. Amazon overall has been doing pretty great during this whole coronavirus situation just because a lot of people are now turning to Prime orders as part of their groceries, or they're just trying to get stuff mailed into them. They're not trying to go out to stores or anything like that. And in turn, that's helped keep the price up overall and not stay in this bearish sentiment like some of the other symbols that we've seen out there. So it's in a nice bullish trend. As we discussed, the simple moving averages, you can see the short dashed line is above the longer dashed one, and both of those are above the solid line. So that's what I like to call a stacked up bullish formation. Momentum itself is retraced back down towards the zero line. Typically, you see that as a sign of exhaustion. So we've seen the price consolidate, basically stay within this choppy sideways range as the momentum's pulled back. But what remains bullish about this is that the overall bars on this indicator are above this zero line, which is this red line here. As long as the bars remain above that level, that means that the overall sentiment this indicator is telling us is that it's still bullish at this time, which is what we want to see. Bullish means that the price is going to move up. So because Amazon's a very strong and volatile stock, and because the overall setup here is still bullish, because we had a nice bullish divergent bar yesterday, which means we'll probably see some sort of follow through of a higher high, I decided to once again put on an options trade to take advantage of that move to the upside. Now this morning on Amazon, we actually moved lower. And some news came out around Amazon. Amazon's anticipating to keep 70% of their workforce that they hired during the coronavirus situation, which, from an employer standpoint, that's great. That means that those, I hate to say seasonal, but those seasonal jobs that were happening during this pandemic are looking to be kept on. Now, from an investor point of view, right, that means Amazon's putting out more money, right? It means that their profit is slightly being eaten away. And so that's probably part of the reason why it gapped down. But as a longer term investor, the way I personally would like to look at this is if they're anticipating to keep on 70% of the workforce, that means that they're anticipating this demand, which was certainly increased by the coronavirus and pandemic, to continue to stay on, right? They think that overall the consumers' habits of spending money have started to change. We've already started to see this change years ago with the whole retail scene, JCPenney's, Nordstrom, Macy's, all of these companies are filing partially for bankruptcy or going out of business or reducing their stores because less people are going into stores to shop. I know myself, I'm a big fan of Amazon Prime. And so with this pandemic happening, it's certainly increased that tenfold to where people are shopping more online and less going out to stores. And if this consumer habit has started to change, especially during this situation, Amazon's taking note of that. They need to increase, their delivery drivers, their warehouse people. They need to make sure that they can keep with that 2-day shipping that they have for Prime and things like that, or same-day shipping if you're doing something like the grocery fresh Amazon Prime shopping. And so that to me is actually a good sign because it means that this spike up that happened during this earnings announcement, right, this move higher into earnings was all due to the fact that we knew that there was increased spending and shopping going on Amazon. That means it plans to stay up around that level. And that to me is a good longer term sign because even though it means that we might as a company have to give more away to, the workers and things like that and spend a little bit more money, it means overall the consumer shopping is building up as well and is planning to stay up there. So I see that more as a positive thing. And I think the rest of the market started to see it that way as well because we opened right at support. And even though we opened lower, we're already bouncing up and trading at the highs of today, which is what exactly I want to see here. So for my Amazon trade, it's a very short-term trade idea. It actually expires this week, so it's either going to work out or it's not going to work out. In this trade, I only have $60 of capital tied up. So you can see combined in this $500 challenge, the max that I have at risk right now is $1.29. Or $129. So I still have a good portion of my $500 left over that I can still use to trade with, knock on wood, right? Hopefully I don't lose the money in these trades, but if I do, still have plenty of capital left over to try and continue to build the account, which is what one of my focuses is here on this challenge, right? I didn't want to put $500 just into one trade by itself. I can certainly do that in my larger accounts, But in this account, I really wanted to be conservative about the capital and show how just putting in a small amount of money, you can still grow an account and make money from it. So in Amazon, it was only $60 of capital. For my options traders out there, for those a bit more familiar, that means I have 60 cents on one contract for this trade. And this is a little bit more of a complex trade. This is a butterfly. So let me pull it up over on Tastyworks, because like I said, to me, it's a little bit easier to read this trading platform. And so it's this week's expiration. That means it expires tomorrow. And a butterfly basically consists of a long debit vertical spread, right? Kind of like what we talked about on UNH, where it has that bullish sentiment to see a move higher. But to help keep costs low, I also put on a credit spread. And a credit spread is the opposite of a debit spread. It means that you don't want the price to move above your short strike in this case. And so by adding on a credit spread, it means I have an additional contract at, let me adjust this. Those aren't my strikes. There we go. It means I have an additional contract at 24.50, and I have a long strike at 24.60. And the combination of that debit vertical spread and that credit vertical spread is what creates a butterfly. And the idea behind this trade is that I want Amazon to move higher, but I want it to kind of stay at the end of the week around 24.50. If it can stay at the end of the week around 24.50, that means my debit spread is completely in the money, looking for that full profit potential, and my credit spread is completely out of the money, looking for that full profit potential. So that's how you can't lose on both sides of this trade. And it allows you to get into what is usually a very expensive symbol to get into, even on the option side, and do so for a very small amount of capital. So I jumped into this trade at 60 cents. You can see right now I could close it out for about $1 and lock in 40 cents of profit, or $40 of profit for that contract per capital amount. But with everything pointed to the upside, I do think there's a good probability we could continue to move higher tomorrow. So unless my good till cancel gets filled today, I'm happy to continue to hold on to this. Now, what's my profit potential on this trade? Well, on Amazon, this is a 10-point spread, right? I have 10 points on the debit spread and 10 points on the credit spread. You don't combine them to make it 20 points for a butterfly. You just look at one side of it. So it's a 10-point butterfly. That's the spread width. I take away my 60-cent cost basis that I paid, which leaves me with a $9.40 profit potential. Based on one contract, right? That is a $940 profit potential. Now, if I let this go into tomorrow and we look at closing around 24.50, I'm going to get the majority of that profit and lock it in. Excellent risk versus reward to see. Now, am I looking to get that full profit potential? Well, I could, depending on what I see tomorrow. But right now, I have a closing order on Amazon set at 260. The reason why I have it set at 260 is because it leaves a very small amount of capital and amount, right? But still allows for a very nice profit over 100%. And excess, yeah, so trading fees are certainly a concern, right? You have to be mindful of that. I actually was trying to get this account opened in Tastyworks, and a second cash account opened in Tastyworks to do that, because to me, Tastyworks has a much better commission rate than Thinkorswim does. Unfortunately, I couldn't get it opened in time, and I've been really wanting to start this challenge, so I just kept it in the Thinkorswim account here. But it's something to be mindful of when you take profits. So that's why, I still have decent profit targets to the upside. They are going to eat away a little bit at that. But I will say, since I first started trading to where we're at now, a lot of these brokerage platforms have already started to cut down on their fees. Certainly with the Robinhood app, for those of you who might be trading out of that, they don't have any fees or commissions and things like that. or I think they're very small. So to me, I try and take those into consideration when I'm looking at my profits to lock it in. And it's certainly going to be something I'm mindful of and watching here on the $500 challenge because it is such a small amount. But I've grown accounts, not this small, I've grown them a little bit bigger than this. But I've had smaller accounts, or what people would consider smaller accounts in the past that I've grown, one $1,000, one $5,000, right? Smaller amounts. And I was still able to grow those and still take care of those commission fees and rates and still have an overall profit in the account from when it started to where it went. So it's concerning, but not, it's not like something that I'm really anxious about in the back of my head. So if I locked in 260, for example, on this trade, that is easily going to cover all of my commission and still allow me an overall profit for the account itself. So that's what I'm looking to do. We'll see whether or not Amazon can continue to the upside right now. Looking at the intraday charts, it's trying to remain bullish, which is good. I don't want it to necessarily be too strong. The con about putting on something like a butterfly is if the price starts to get above 24.60, right, then I start to go back into the loss mode again. So 24.50 is ideally where we pin tomorrow. We'll see if that happens. But once again, you can see it gaining in value. So even if we just start to go slightly in the money on this, there's a good probability that 260 good till cancel will hit before expiration tomorrow, and I can still walk away with a profit on the trade overall. Of course, excess, not a problem. So if you guys have any other questions, of course, please let me know. I'll try and keep a closer eye on the chat there. But those are the two trades I have on right now for the $500 challenge. So this one we'll know very quickly tomorrow whether or not it works out. And UNH will know within the next week if it works out if I don't close it out sooner than that.